Good evening, ladies and gentlemen. My name is Bastaro. I'm from BrightPensioen, and I will provide this webinar for you guys today. Welcome. This webinar is really used to give you guys more information about BrightPensioen, our product, and of course the arrangements we have made with together with bunq. Um, if correct, you guys will find a chat box on the right. Can someone please let me know if you guys can hear me loud and clear, so I know everything is set correctly for the webinar. Okay, thank you. I see all the comments coming in. Thanks for that, guys. So for everybody who just joined, welcome here at this webinar about BrightPensioen. My name is Bastero, and I will provide the session for you guys today. Um, so yeah, just to give you guys an idea what we're going to talk about. First, I want to explain a little about how pension works in the Netherlands. And next to that, why BrightPensioen and what makes us different than other providers on the market. And I'm also going to show you guys how can BrightPensioen work for you. And of course, in the end, we're going to talk about the next steps, and I'll do a demo of one of our tools, so you guys have an idea how our tools work. And I'm also going to explain something about the services we will provide for all of you. So yeah, to start off, what is pension actually? And if you ask me, it's pretty much nothing more than savings for later, and these savings get transferred in a monthly payout from the moment we're not working anymore. That's kind of the idea. But what is the difference between regular saving and pension savings? I mean, you could also do your own investments, right? Buy your own stocks, build your own portfolio. Why does it have to be in a pension? Wait, what's the big deal? It really has to do everything with taxes. Like pension saving will give you a big tax benefit. First of all, there's no capital tax involved in all the funds you have in a pension product. Like in the Netherlands, we have a rule with capital tax. If you have over a certain amount of personal savings, you have to pay capital tax on these funds every year. All the funds you have in a pension product, there's no capital tax involved. So that's the first benefit. And next to that, it will give you an income tax benefit. I'm going to explain a little more about this income tax benefit later on in the session. But to give you guys a quick idea, for every euro you put in your pension account, you get the paid taxes back. So if you work full time, most of the times it's around 40%. And where you're going to do the payout from your pension account. So when you retire, you pay a lower tax rate. So right now you get more back than you pay later on. And that's actually the biggest benefit looking at pension saving. And again, I'm going to explain a little more about that with figures and stuff like that during the session. So you guys have a clear idea about how that works. The other difference is the accessibility. It's really the idea that you access your pension funds when you retire. There are some exceptions that you can access them earlier on, and I'm going to explain these exceptions also during this session. But you will get the optimal tax benefit when you access these funds when you retire, literally. Yeah. So, um, how does the Dutch pension system work? To be honest, I can do a presentation about only this subject for hours. We're not going to do that, so I pointed out the most interesting figures and facts for you guys. So I'm going to share those. And if something is not clear about this part or something else during this webinar, you guys can type your questions in the chat box. I forgot to mention that when we started. All the messages you put in the chat box are private, so other employees of bunq cannot see what you ask us, and I have also a colleague of mine in the chat box who's doing the moderating and will also help with answering all the questions. So really, you can ask us anything you want to ask. So please let us know if something is not clear or you have any personal questions. So the Dutch pension system works with three pillars. So first, we have the AOW. The second is employer pension, and the third one is individual pension, also called annuity. So you could say there are like three different ways of acquiring pension in the Netherlands. And I'm going to explain them pillar by pillar, what the differences are and how this works. So, first of all, the first pillar is called AOW. It's in most countries similar to state pension. So when we reach our retirement age, or in Dutch terms we say AOW age, we get a payout from the state. But how is this acquired? Well, the good thing is we don't have to work for it. The only thing we have to do is live in the Netherlands. And this is actually pretty interesting for everybody here in the session who came living in the Netherlands on a later age. If that's your case, take a close look, because this is pretty interesting for you, because you acquire 2% per year starting 50 years before your retirement, and you acquire this 2% for every year you live in the Netherlands. So in indication of my retirement age is 69, so I would start acquiring this 2% per year from when I was 19 years old. But what if I was living in Japan from when I was 25 to 30 years old? Well, these 5 years I don't live in the Netherlands, so I get 5 times 2, or 10% less state pension than someone who is living his or her entire life in the Netherlands. So I'm also going to show you guys the figures what was paid out last year to everybody who already reached this AOW age, and you can see if you're single, you get a little more than if you're married or cohabiting. This is per person, but if you're married or cohabiting, you get a little over 900 a month, and if you're single, you get close to 1400 a month. This is net per person per month. Um, but we can ask ourselves, like, how long is this system still sustainable? I mean, if we go back in the days, we had way more people working per retiree than we have right now, and the indication is that in 2040 we only have two persons working per retiree. So yeah, it's not that much that we're getting from the state. To be honest, if you're used to a full-time salary and this is the only thing you'll get, you'll fall back in buying power quite a bit. And it's really the idea about pension, that on top of this AOW or state pension, you get an extra form of income, and together it's kind of the same as you're used to while you as income while you were working. That could be or should be the goal. Um, to acquire this extra form of income, this could be done in the second pillar. Again, this is not what we offer at BrightPensioen, but it could be that you've worked at a previous employer here in the Netherlands, and the previous employer had a second pillar pension scheme. If you want to find out for yourself, you log in at mijnpensioenoverzicht.nl. When you log in over there, you can see what you've acquired so far in the second pillar. So third pillar pension products are not visible in mijnpensioenoverzicht.nl, only second pillar pension schemes. And there's a few characteristics. It's mostly mandatory, collective, it's not very flexible. There's a fixed deposit and a fixed payout. So most of the times, if you work for an employer who has a second pillar scheme, you sign your contract where you're going to work there, and there's a part of your salary going to a second pillar pension scheme, and you as an employee have no power or anything. You cannot say anything about it. It's all arranged for you, but there's a part of your salary going to one of these pension providers. So that way it's not very flexible. There's also a fixed deposit, and this fixed payout I mentioned, um, all the funds you've acquired in the second pillar will always be paid out lifelong. It sounds pretty nice, right? I mean, but well, imagine if you've only acquired like a few thousand euros at, for example, Nationale Nederlanden. So when you retire, you got called Nationale Nederlanden. You say, hey, can you guys pay these funds out in like 5 years, or like a shorter period of time? I don't want to have this lifelong. We gotta. I'll get like three euros a month till the moment I die. Um, there's no other way than for them also to do a lifelong payment. So there's also a fixed payout in this way. So um, because of this flexibility, more and more employers choose to do options in the third pillar for their employees because of the flexibility. So this flexibility is in the accumulation phase, but also in the payout phase. So talking about the accumulation phase, you guys will have your own online portal with BrightPensioen. You can log in and you can determine your own contribution. You can also change this every month. And this same flexibility is, if or kind of same, is when you go to the payout phase. Like you can choose also for a lifelong payment plan, but you can also choose to let all the funds be paid out in 5 years after you reached your retirement age. So there's a little more flexibility regarding that part. And there's also an option to retire early if you want to. You can start with the payment before your retirement age. There are a few laws and rules if you want to do so, but it is possible if you want to do so. Um, Also, for everybody who's not Dutch, like what are your options with these funds for if you want to move to a different country, for example? And there are options to access the funds and move them cross border. If this is your situation, also our customer service can help you out with these options. But it is possible to take them out and move them cross border if you want to. And this is not possible for all the funds that are in a second pillar pension product. Um, so yeah, these are actually the most important parts. Next to that, by the way, you can also access these funds earlier on in case of disability. So if you're not able to do your work anymore, you have a writing from the doctor that that says that that's the case, you can take out the funds also if you want to. I always say use this as like a last resort to pay like rent or mortgage or something like that, because if you take them out earlier, there's less left for your pension, of course. Um, so to summarize, what is pension? Is actually a deposit we do every month. We'll take a tax benefit and we'll make returns. Where the biggest part of your pension should be returns. This is actually calculated with figures from the past who don't get any certainty for the future. But taking in account these figures from the past, it's really the idea. If you start with acquiring your pension when you're 30 years old, then almost 3/4 of your pension should be returns and not your own deposit that you did. The later you start with acquiring your pension, the bigger the part of your total accumulated capital is your own deposit and not the returns. I see a question coming in. Yes. Okay, and also see my colleague is helping out with the questions. I also have a question for you guys. How long, on average, do we receive pension in the Netherlands? And I do ask this question for a reason. But on the right, you guys can type your answer in the chat box if you think it's A, B, or C. And again, I do ask this question for a specific reason. And I see some answers coming in. Thank you guys for that. Okay. Well, some of you guys had it at the right end. It's really 18.3 years. So, um, yeah, that's one way it's good news. But again, I did ask this question for a reason. If we go back to like the state pension, like how much do we get again? If you're married or cohabiting, you get a little over 900 a month. If you're single, you get close to 1400 a month. Let's say that if you want to have an extra uh, income on top of your AOW, like how much do you need to acquire for a specific income? So let's say you want to have 2000 income on top of your AOW or state pension. How much funds do you need to acquire? Well, quick math shows it's like around 440,000 euros. Like, do the math. It's 2,000 times 12. We have 1 year times 80.3. You're looking at 440,000 euros to make sure you get an income of 2,000 on top of your state pension. So you're at around 3,000 income. Um, also see more questions coming in. Uh, does it have to do with the life expectancy? Yeah, something like that. But 18.3 years. It's around this figure for the last few years. This is the average. But yeah. More questions. It has to do with life expectancy. Yeah. So, questions so far. I see a lot of them coming in. I also see my colleague helping out with all these questions. So I think that's going good. I'm going to talk about BrightPensioen and what makes us different than other providers on the market. Well, first of all, we have a mission. We want to change the financial system in a more fair and sustainable way. Um, we think this could be done. It's also the reason why we were founded, and one of the reasons why a lot of employers choose for BrightPensioen for their employees. Um, and this is, for me, the most important slide of the whole presentation. This is the reason why we were founded. Like, we invest at cost price. We are the only provider on the market where the revenue model is not based on the funds of our participants. Our revenue model is purely based on a fixed membership fee, which is paid by your employer. This way, you will have more pension in the end, assuming you have exactly the same investment portfolio with us or this exact same investment portfolio at a different provider. Then with us, you'll have more pension in the end because we don't earn on your funds. We don't charge a percentage on the managed assets. We invest everything at cost price. Um, Next to that, participants have a voice. So you actually don't have to do anything with this, but if you want to, you can join our yearly meetings and really vote on different subjects. Next to that, we invest sustainable, and we really think our business and revenue model is also more sustainable. And if you're interested in the way we invest, how the stocks are divided, the whole investment portfolio, you can read more about that on our website, and we'll explain everything over there. And what we see right now is that looking at sustainable investing, we go as far as possible following the regulations and guidelines from the AFM. This is like the Authorities Financial Markets in the Netherlands. And I also see that my colleague put a link in the chat which you guys can use to see everything about the way we invest. Um, you guys can open two accounts for one membership. So you can open an investment account for free if you want to. And what's the difference between the two accounts? Like the pension account will give you a tax benefit, but it's locked for later. It's really the idea you access the funds when you retire, of course. And the investment account does not have any tax benefit, but it's also not locked for later. Both accounts are invested in the same way, so it's the same yield, same investment portfolio, same returns. Everything is the same. The only difference is the tax benefit locked for later, no tax benefit, always accessible. Uh, so that's the difference. Um, we're also a social enterprise, so it's not our goal to maximize profits, but these profits are more used to solve a social challenge. And what we see right now is that a growing group of people in the Netherlands are not acquiring any form of pension whatsoever, and also a lot of them are employees working for big companies, and a lot of people have no idea they can also acquire their own pension and how to do so. So we think there should be more attention for this part, because if this whole group reaches retirement age, they'll fall back in buying power altogether, and this could have some impact on our economy in the future. Um, Questions so far. I'm gonna scroll a little bit because I see a lot of questions asked here. Let's see. So, could I, at 20 years in the future, transfer funds from BrightPensioen to a column 2 provider if I want to consolidate accounts? Very good question. So, if you look at third pillar pension and second pillar pension, by law, it's not possible to move funds from the third to the second or vice versa. So, once the funds are in a pillar, they'll stay there. And in the second pillar, it's not always possible to put all the funds together at one party. In the third pillar, it's always possible to put everything together at one party, but it has to remain in the third pillar. That's the thing. Same counts for second pillar. All the funds you have in the second pillar will always stay in the second pillar. In the third pillar, there's just a little more flexibility, looking at payout, retire early, and stuff like that. Yeah. Um, so see a question, what happens to change employer? I'm going to explain a little more about that. What happens with your accounts when you're not working for a bank anymore? So I'm going to explain that also. And I see a question coming in. Can I deposit extra money freely whenever I want to do so? Yes, you can. When you open your account with us, you have your own online portal, and you can put in a monthly contribution, a one-off contribution, whatever you want, whatever you fill in at your online portal, we're going to direct debit from your personal bank account. So, how is pension arranged for you guys? What is bunq going to provide for you? Well, first, I've also added two QR codes. So, if you guys want to, you can scan with your phone and start the registration form. Because, of course, to receive the contribution that bunq is going to do for you guys, you have to open an account with us. So what is bunq going to do? First of all, they'll pay for the membership fee. They'll also pay for the registration fee. And you guys will get a contribution of 3% based on the gross salary. And every 4 years of employment, you get 1.5% extra on top of the 3%. Um, and this contribution is capped at a 10.5% total. From a quick calculation, I think you have to work for 20 years for bunq to reach the cap. Um, And I see also um, uh, mentioning from Sophia, the membership fee and the registration fee will be deducted from the first contribution you guys are going to do. Um, so yeah, this will be done in your on your payslip, and this will be credited. Yes. So what happens if you stop working for bunq? Um, like there are three things you can do. You can put in a break. This means uh, you pause your account. You cannot contribute actively to the account anymore, but there's no membership fee charged on your part. The other option is that you want to continue yourself. If you want to do so, this is also possible, but of course, then you have to pay the membership fee yourself. And the last option is you transfer the funds to a other third pillar provider on the market, um, knowing that the new provider is earning on your funds again. So if you leave it at BrightPensioen, it will remain invested at cost price to the moment you retire. So that's actually how it works. So you guys have all the options you actually want to have when you leave bunq. So you can transfer to another provider, leave the funds at BrightPensioen and pay no membership fee when passed, or continue yourself at BrightPensioen and pay the membership fee yourself. So how do you guys get started? Actually quite easy. You can open an account. It costs only 5 minutes of your time. You can determine your own contribution using our tools. I'm going to explain how these tools work. And last but not least, claim your taxes back. We will send all information to the Dutch tax authorities. So BrightPensioen will be pre-filled in on the form. So if you do your taxes on a yearly basis, BrightPensioen will be already filled in. So the contributions that you guys are going to do this year will be on your tax claim, tax return next year in 2025. So that's how this works. So I'm going to give you guys a demonstration about one of our tools, and I'm going to share my screen. Let's see. Let's see. Okay, so if correct, you guys can see this screen right now. So we actually have two tools. The first one is our jaarruimte tool. Unfortunately, this one is only in Dutch, but it's super easy to use. Literally, you only have to scroll down when you go to this tool and fill in your income of last year, to see how much you can put in your pension this year. What's the max? So assume I made like, well, let's say 40,000 euros last year. This is included my holiday allowance, gross salary included my 8% holiday allowance. Well, this tool shows if I made 40,000 last year, I can set aside 6,737 in this year, um, which is a lot, to be honest. If my income is 40,000, I will never put in 6,737 in for my pension. But it's actually an easy to use tool. You can put in here what you've earned last year, and the tool will say what the max is in your situation. Well, with the percentages you'll get from bunq, you will not easily reach the max, but if you want to do an extra contribution yourself, it's good to check out this tool, fill in your income of last year and see what the max is what you can set aside for your pension. And this max will actually only say what the max is for the tax return. So in this situation, I can set aside 3,737 for my pension, and on this figure I'll get all the taxes back. If I put in 3,000 or if I put in 4,000 in this situation, I'll get the taxes back over 3,737, but the rest till 4,000, I will not receive any tax benefit on those funds. So that's why it's good to use this tool. And again, it's easy to use. So you guys will figure it out. And if something is not clear, you can always call our customer service or plan a call with us so we can help you out. If we go to the other tool, this is our pension indicator. Um, so this link will also be in the email you guys will receive from bunq. And this is actually how this tool works. So I'll do myself as an example. I'm 33 years old. Indication of my retirement age is 69. And let's say my total contribution is going to be, well, let's say 250 a month, for example. Oh, so you'll see if you use these slide bars, an indication on the right will be adjusted. So in this situation, the indication of my total accumulated capital will be 352,000. And if I'm going to put that in a monthly payment on a in a lifelong payment plan, I'll get 2,200 on top of my state pension, on top of my AOW. So yeah, this could be a goal. If my goal would be like, hey, I want to have 2,000 on top of my state pension, then this is set up the right way. If my goal is higher, of course, I have to change the contribution so it will be higher. Um, so what if I would do exactly this, but then at a provider where the revenue model is based on my funds again? Um, let's take in an account like one of the cheapest other third pillar pension providers on the market. The difference is around the 0.5% that's charged on the managed funds. So right now I have 352,000, 0.5% off, 315,000. So this 0.5% will cost me, well, more than 30,000 euros in the end. If I'm at a provider who charges 1% a year, I don't have 352,000, but I'm left with 282,000. If I'm at a provider who charges 1.5% a year, it's even less. It will almost cost me 100,000 euros. And there are providers who charge 1.5% per year from their clients. Again, we invest everything at cost price. We only earn on a fixed membership fee. So the cost price is already calculated through in this tool. So you can use this tool to have a, well, good indication about how it's going to be for you. I'm going back to the presentation. We're almost done. Just a few more slides. Let's see. So also you've just saw you guys just saw the difference in the revenue model and ways that like financial institutions or pension providers have these different percentages and earnings they do. um, you see that if we as BrightPensioen would charge a percentage every year, is way more lucrative in the long run. And I think this is also one of the reasons that we're still the only provider on the market where the revenue model is based on the fixed membership fee instead of the managed assets of our clients. So I mentioned before the pay slip and how this works. So bunq is going to do a contribution for you guys. But how does it work on the pay slip? Because we also talked about the tax benefits when we started with this presentation. Well, assume you earn a gross salary of 3,000 euros, and you'll pay an income tax, and then it will leave you with a net salary. So if you're gonna add, for example, the 3% contribution of bunq to the payslip, it looks like this. So you have a 90 euro contribution on top of the 3,000. You'll see you'll pay a little more income tax, right? You'll see if without the pension scheme you had 590 income tax. With this extra 90 euros, you'll pay 629 income tax in total. Then after that, there's a net deduction of 90 euros. When you look at your payslip, and 90 euros is going to your BrightPensioen account. So you'll see you have slightly less net salary this way. And then you get the tax return. In this example, the tax return is calculated on the 90 euro contribution, of course. So in the end, you'll have exactly the same net salary together with this tax refund, without the pension scheme or with the pension scheme. And with the pension scheme, you have an extra 90 euros added to your account on a monthly basis. So there's really no reason to not join this pension plan, because it will not cost you anything on a yearly basis. Just on a monthly basis, you'll have a little less net salary, but you'll get everything back from the Dutch tax authorities. Um, so yeah, we also have a few ratings and reviews. Like MoneyView gave us 5 stars for the way we invest with the funds of our participants. We received this in 2021, 2022, and also last year, 2023. Finner also gave us 5 stars. Last year, again, 5 stars for the way we invest with the funds of our participants. For us, the most important stars are from Trustpilot. I don't know if you guys are familiar with Trustpilot, but we got like 4.8 out of 5 stars with a few hundred reviews. Right now, we're one of the best rated financial institutions in the Netherlands on Trustpilot, looking at banking and finance, and we're very, very proud of that. I think it's mostly because the service we provide for our clients. Like if you call our customer service, you'll get someone on the phone directly. If you type an email, most situations you'll get an answer in 24 hours. Yeah, of course, also our investment results. If you compare other neutral investment portfolios with ours, uh, we'll do a slightly better than the average on the market in the Netherlands. So this also gives good reviews, of course. And we're on the supervision and custody. So also saw one of the questions during this session, like, hey, what happens with my funds when BrightPensioen goes bankrupt? Well, like we're controlling your funds. We're not going to be owner of these funds. So if we as controller go bankrupt, this will have no impact on the managed funds you have with us. Like our bankruptcy will have zero impact on your funds. So the thing what happens is that a new provider is going to take over the whole portfolio. If you don't like the new provider, you can transfer your funds to a different third pillar pension provider on the market of your choosing. So yeah, our bankruptcy will have no influence or effect on the funds you'll have with us, even if it's over 100,000 euros, because we are not a bank, for example. Um, So and we're also under control of the AFM, authorities financial markets in the Netherlands, and of course the Nederlandse bank, the Dutch bank. Yeah, and KCI's, this is where all the documents and registration things are kept. So that's how it works with supervision and custody. Um, so yeah, this is the last part of the presentation, but really one of the most important parts. Like, do you guys know the future? Well, probably not. I mean, we know at some point we get a little older and we're starting to look a little different, but how is it going to look like financial wise or economy wise? To be honest, we have no idea. But it should not be a reason to postpone your own contribution you're going to do to the pension plan. So suppose you're like 25 years old and you can start today or start 5 years later. So when you're 30 years old. So you guys don't have to answer this question. I'm just going to explain what the difference is between the two. So assume you put in 250 a month from your 25th birthday until you're 67 years old. And we're calculating with our returns of 6% a year. This is our goal of returns in the long run. So if you calculate it flat out, these from 25 till you're 67, yeah, idea is that if you contribute 250 euros a month, you'll have 560,000 euros in the end. If you start 5 years later, so you postpone it for 5 years, it will result in 155,000 euros last pension. Okay, you do save something, right? These 5 years you did not contribute to the plan, so you've saved 15,000 in this example, but in the end it will be like 28% less pension. And if you postpone 10 years, it's of course even worse. I mean, you do save something again, 30,000 in this example, but in the end, it will almost cost you half of your pension. So, yeah, that's the difference. So stop postponing, start yesterday instead of today. Thank you guys for the attention, and this was the presentation from my side. I still see there are some questions that I want to answer. Let's begin on the next one. The exact annual cost, like for if people open an individual account with us, the annual costs are 210 euros a year. With bunq, we have a deal for this first year that it will be 100 euros per person, which is way lower than the cost we do normally. But those are the annual costs for this year, 100 euros per person. After that, it will be 150 euros per person. So those are the yearly fees, not the monthly fees. These are yearly fees. I see the question I didn't get who eventually pays the monthly fees for the account. Like bunq will pay it for you guys, but it will also be deducted on your pay slip. So we're gonna send the invoices to bunq. You don't have to worry about that, but it will be yeah, mutated on your pay slip if you're going to participate at BrightPensioen. Yes. I see also some other questions. Let's see if can help you guys out. I see some people having some questions with the registration process. Uh, Also see a question coming in, like what happens to our pension if BrightPensioen stops operating for whatever reason? Yeah, a good question. It's actually the same if we go bankrupt. Like, yeah, you can transfer your funds to a different party or a different third pillar provider on the market of your choosing, if that's the situation. See a question coming in, like how do I connect my account to bunq? Um, well, yeah, you can open your account with us with one of these registration links. So if it's English, right, Dutch on the left, and you can mention that your employer is bunq, and then our Know Your Client team will do the check if this is correct. I see a question coming in, like, what is the exact payout options? You mentioned lifetime or 5 years. Is there also something in between? Yes, you can choose everything in between the 5 years or a lifetime. So, tax wise, the most optimum is the minimum of 5 years to a maximum of lifelong. You can also say, like, hey, when I have all these funds in the third pillar, I want to do one part in 5 years, one part in 10 years, and one part lifelong. So the first few years of my retirement, I'll have a higher income, and it will get lower over time to the moment I die. That and you don't have to choose this right now. You only have to choose that when you retire, of course. So yeah, but very good question. Yes. Um, okay. Oh yeah, I also see also a question uh, coming in, like how can we be sure that BrightPensioen is not raising the fees massively in the future? Well, good question. Like we have a members cooperative, and all our members have a voice. So if we want to change something, the majority of the members have to vote for it. Well, if it's something that will have a negative impact on the funds we have of our members, of course our members will not vote for it. So this way, yeah, we also want to show that it is a really fair and sustainable way of maintaining our business. Well, yeah, you can also use the account and only let the 3% from bunq go in it. But if you want to have a good pension in the end, it's really the idea you also do a contribution yourself. And you can use our pension indicator to calculate, like, hey, so what is the contribution of bunq? What's the contribution I want to do myself? And together, is that enough for my retirement? This is, of course, different for everybody, but you can use our tools to help you out with these calculations. And yeah, if something happens with you, like in event of death, I see one of these questions also asked in the session. In event of death, all the accumulated capital will go to your relatives. Okay. Um, I think most questions are answered. If not, there are a lot of them. So it could be the case that me or my colleague missed one of it. If that's the situations, excuse us. Let's see if I can help you guys out with some other questions. I think there's another question. The contribution are set up through direct debit. If this is correct, yes, it's everything is direct debit. So also when you log in your account and you put in your own contribution, we will direct debit it at the end of the month from your own bank account. And the contribution, this 3% from bunq, is also going automatically into account starting this month in January. So Yeah, thank you guys for the attention. Also, thank you guys for all the questions. I hope everything was clear during this session, and this helped you guys with all the questions you had. Um, yeah, so if you're not registered yet, you will receive an email from bunq, and I think you've already received one with the registration links. Again, thank you guys for the attention, and have a very nice evening. Bye bye.